Welcome in, everybody, and welcome back. My name is Jeremy Toms, host of the Big Law Capitalist podcast. Good to have you and good to see you. Thank you for stopping by. Big episode today. We actually have Matt Faircloth on the episode today. He's the founder and CEO of the DeRosa Group, as well as a BiggerPockets contributor, which in and of itself, holy crap, that's fantastic. So I'm really happy to have him on the podcast today. He has done incredible things in the real estate space, and I think we can learn so much from his knowledge base and also just from his approach to life. He has a sort of a belief system that I just find completely fascinating and entirely inspirational. So I'm so excited for today's episode. Make sure you listen all the way through. We went a little bit long today, but I wanted to make sure we hit every topic that I could while I had him. He's a very busy guy, so I was happy to kind of have a chance to just pick his brain on a lot of different topics. Literally, he went from a house hack to $150 million in assets under management. Incredible things. I'm telling you, this is one of my favorite episodes. Make sure, listen all the way through. Make sure afterwards, if you have any questions, reach out to me on LinkedIn at Jeremy Toms, on Instagram at Big Law Capitalist. Again, incredible episode. I'm so excited. Fun fact, he actually authored a book that I first read when I started real estate investing. It's called Raising Private Capital. Too excited today. I'm ready to go in. And so make sure you listen out. We chat about that a little bit on the podcast as well. As always, thank you for stopping by. I want to get into it. Without further ado, Matt Faircloth, everybody. Let's go. All right, guys, and we're in there. Matt Faircloth, man, I have to say it's an honor and a privilege to have you on the Big Law Capitalist podcast, man. Thank you so much for joining us. I want to make sure that that everybody has a chance to get to know you as well. So I want to give you just a minute just to introduce yourself as far as, where you're from, how you got started in real estate. And then from there, dude, I want to go nuts. I just want to cover a bunch of stuff because you're one of the greater minds in the business.
Yeah, man. So thank you. So good question. How I got started. I got started the way almost probably many of your guests and many people in this business got started. It was about reading Rich Dad Poor Dad a long time ago, right? And I was a traveling sales rep at the time, and I read Rich Dad Poor Dad because my girlfriend, now wife, put it in my hand. That book changed my life and in a lot of ways. And it really opened me up to the possibility of entrepreneurship versus just working for money. And so that book led me to real estate as the venture that I would want to get into. It talks about a lot of different things in business in general, but it also talks a lot about real estate. And I bought a single family home for me to live in and moved into it and rented out 2 bedrooms in my house, lived in the other one. And before you knew it, I was living there rent free and, still making good money at my day job. So I was able to pay off all my student loans, pay off my credit cards, and really get myself into a great financial position pretty quickly. And so that tuned my head to real estate. My girlfriend at the time and I were like, hey, this is awesome. Let's do this again. And so we bought a duplex in Philly. And then when we got married, we realized we had a small portfolio. Let me go full-time real estate and she becomes our sugar mama, So we relied off her income while I built the DeRosa Group. And DeRosa is her mother's maiden name. That's how we came up with the cool Paisan. Yeah. Well, we didn't want to be like the Faircloth Group, Jeremy. We wanted to be like, like flying around with our name on the side of the helicopter or whatever, Yeah, we have a little bit lesser ego than that. So we wanted to have a name that was larger than us. And DeRosa is one of those Paisan, like Stumbat's kind of name, very Italian. My wife is very Italian. So that's how we came up with it.
As is mine. So that's awesome. That's a common point that we definitely share. And so the DeRosa Group, I won't even bury the lead. You guys are doing incredibly major things. And so to give the viewers just a high level 50,000 foot view of, as far as the DeRosa Group, what you're into, what you guys are investing in and how large you're talking about there.
We've got 150 million in assets under management right now, totaling apartment buildings in probably about a dozen or so apartment buildings in 3 states, Pennsylvania, North Carolina, and Kentucky. We invest in blue collar, C-class, workforce housing, those that earn at or around the middle of the income level of a market. And we just look to give them great housing for a great price and look to raise their standard of living a little bit and get compensated for doing so. In that. So our mantra for our company, Jeremy, is to transform lives through real estate. That's what we do. And those people are our investors and our tenants and us as a company too.
Dude, I love it, man. That's you. So many firsts you just hit with that, man, for the podcast. I'm definitely thinking you're the first to eclipse 100 million. Congratulations to you, which you need none,
Thank you.
but that is fantastic, man. One quick note, by the way, the 3 states you guys invest in are the 3 states that I've lived in throughout my life. So like,
Stop it.
oh man, you could do a trail from like Kentucky, where I was born and raised, Louisville, Kentucky.
That's our business plan. Just following Jeremy Thomas around, going to investing in his hometown, and then where I grew up. Yeah, we have a good amount of apartment buildings in Lexington. We're actually not in Louisville. But we a lot of our assets are in Lexington, which we see. Lexington's a very interesting market, man. And I love investing in markets that have interesting facets to them that are irreplaceable. As you know from going to school there, Lexington's surrounded by horse farms. And they're all deed restricted. As a lawyer, you can't build on something that's deed restricted or that the government has limited what you can and cannot do with it. And so all the horse farm land around Lexington is called the urban service boundary. And you're not allowed to build on it. So Lexington might as well be an island. And there's job growth happening there, but that job growth the city can't sprawl. It can't get any bigger because you'd be building on top of horse farms, which is a no-no.
It's so funny you say that, because when I lived there, I obviously had zero clue that was the case. But when I became an investor and started looking back at different places where I've lived, just to kind of see what the market was like, and almost that like, I wish I would have invested there when I lived there, that sort of feel. And that's what's funny about Lexington is like, if you go there, I mean, if you're 30 miles outside of Lexington and you're driving in, you're not going to see anything but like rolling hills and thoroughbreds. Like that's it.
Flying in there, I'm like, where the hell is this town, man?
Yeah.
Nothing. Like I see just a bunch of nothing. And I didn't even know there were horse farms. The first time I flew in there, I just saw all these funky looking pieces of land with like fences around trees and fences around everything. There are funky looking fences and there's little dots all running around inside the fence and stuff like that. And as the plane got lower, I'm like, man, those are horses. And there are horses everywhere around this area. So yeah, it's quite a bit. And when you drive it, it's gorgeous. But yeah, there's a whole lot of nothing around the town. But then this town itself, once you get into the town, it's literally like nothing, and then boom, city. You can tell where that urban service boundary starts because the city like just stops, and then horse farms pick up right there next to city. Like there's like literally a Starbucks, and then like 100 feet away, a horse farm. This is where the city boundary stops.
I know it so well. It's so funny. Like it's one of those cities where when you finally get into the boundaries of the city, you're like, oh, this is a thing. And it has like several economic engines in it that like that make it a good market to invest in. But like, again, if you're riding into the city or you're flying in, you'd have no idea that this is like a place where like a lot of people live and thrive, So it's so funny, man. I love that. I love that market. So thank you for appeasing me for just a few minutes on my home, man. I love Kentucky. And so the DeRosa Group, you've grown that into a massive vehicle, right? But getting there, right? Getting started in investing, you mentioned the fact that you essentially house hacked your way into investing. But if somebody's looking at what you've done, they're like, holy hell, man, like you're deep into it. You've sort of mastered the syndication game when it comes to investing. How would you tell the average, high income, high net worth person, like, how would you tell them to get started in investing? What would be your advice as far as getting started?
Well, Jeremy, it's not like I just went and took some guru course and then poof, 150 units later, 150 million in assets later, right? Like I would tell someone listening, as much as fun and like big and sexy as it sounds, 150 million in AUM did not happen overnight. And you don't need to make that your 1 or 2 or 3 year goal. I can tell you it takes a while to get to that. And it is a behemoth to manage and you got to work your way into it. So we started small with our own money. Me and Liz did. And we did a lot of deals with our own money. And then we slowly brought in friends and family investors. And then we slowly brought in non-people outside of that. So we kind of scaled into it. I have a mantra, Jeremy, to tell the new investor, the one that's looking to scale, don't put your ego down and just double your portfolio every time you do a deal. So if you got 2 units, great. Do another deal to bring it up to 4. And then once you got that deal stabilized, do another deal and bring it up to 8. Then do another deal, bring it up to 16. And before you know it, I mean, if you if you know math a little bit, you actually can scale pretty quickly that way. And in a couple of years, you could be sitting in the mid to high hundreds of assets of units under management. And then you decide if you want to do this thing full time or not. But I would scale smartly and not just go and buy a bunch of stuff to achieve a AUM number. I've been investing full time, Jeremy, for 17 years. So it's not like I got to thousands of units overnight or whatever. We built and scratched and clawed it up ourselves.
You know what's funny is I talk to people, and sometimes people ask me about investing strategies or things they should think about, and a lot of times they're always looking for that home run deal. It's that like, well, that's just not going to give me the return I want. I want 30%. I want that, and I'm like, I get it, but at the same time, I always use a baseball metaphor. It's base hits. It's doubles. That's how you're going to make the All-Star team.
Ask the Houston Astros.
Right.
Ask the Houston Astros what if they'd rather have base hits or home runs.
Exactly.
The Houston Astros, great pitching, and they're good at getting on base. That's how they play ball, and that'll win you the World Series.
Exactly.
And they beat a team that's really good at hitting home runs. Just recently in the World Series.
It's all about the fundamentals, man. I always tell people like it's getting in the game. It's starting. It's getting your money working.
And it's as much as it's big and sexy to be like, I'm going to start buying real estate and I want to buy 3,000 units in a year or whatever, or even 300 units in a year or 30 units in a year. Like that sure does feel good to say, but I can tell you that there's 3 dozen ways you can fall on your face doing that. I'd much rather see somebody buy a duplex to get started, figuring it out, let that duplex kick their butt. And then once they've got a business plan written around it and how that duplex, they just crush that duplex, then go buy something bigger, and then go buy something bigger than that and scale up every time.
Yeah, I love it, man. And your story is crazy interesting because it, in some ways, is sort of serendipitous. For instance, the way you started with BiggerPockets, you were telling me that story the last time we chatted. It really was just a matter of like building relationships in real estate, just actively doing things. But it wasn't like, hey, I want to do this to make myself into this rock star. It was more like, I'm interested in what I'm doing, so I'm going to start being a contributor to BiggerPockets. And so I wanted to chat just real quick about BiggerPockets, because that's like the podcast, that's like the resource for investors. So when people see that name or hear that name, they're like, whoa. And so I want to chat about that because I think your story of how you got involved with BiggerPockets and your continuing involvement, I think is not only inspirational but sort of lends a hand to the idea of investing, which is like the slow and steady wins the race, right? It's like taking opportunities where they present themselves.
Yeah, I'm very aligned with BiggerPockets' way of doing business, that it's like, this should be accessible for all people. I mean, BiggerPockets is typically very, very affordable, if not free, to access their information. You might have to listen to a commercial, but you get their stuff for free, which is in line with what, again, transforming lives to real estate. What we believe, BiggerPockets is in line with that. So that's why I'm really, really grateful to be working with them, because not just do they have an enormous megaphone, but their mission is aligned with my mission too. And so the way I got involved with them was, I happened to catch them when they were just getting going. Again, I've been doing this for a while and that. So Liz reached out to them in 2013, scheduled a call with like, we'll have one of our, blog managers, have a call with you. And it was Brandon, And me, Liz, and Brandon have a call because they only had like 4 employees at the time. And so Brandon just vets us a little bit. And what's funny, Jeremy, is the whole time on the call that me and Liz had with Brandon, I haven't had a chance to tell him this we're friends, but I haven't had a chance to tell him this face to face yet. The whole time, I don't know if he still forgave me on this one, but the whole time on the call, I'm calling it BetterPockets, right? Yeah. And I looked down at my phone. I was like, yeah, BetterPockets, great organization. We're big fans. And he's thinking, no, you're not a fan, knucklehead. You can't even say the name. I looked down at my phone, and she is blowing me up in her full Italian way, just going, idiot, it's BiggerPockets. Fool, it's BiggerPockets. Stop it. She's just texting me, on my phone in like big capital letters with exclamation points and everything. That's like incredible. That. I'm like, oh, yeah. But Brandon must have a sense of humor because he forgave me on that one. And we started writing articles for them. And some people say, oh, right place, right time, that you guys just got lucky. Well, let me tell you what it looked like from there. We got an agreement to write articles for them. And Liz and I wrote articles every week for a year. Wrote 1,000-word articles for a year and posted on the BiggerPockets webpage. And it took a while, and there was a commitment. And for a year we did that. And then Grant Cardone cancels on the podcast on a Sunday. He cancels for his interview on Monday because he had a scheduling conflict. So we get a call from Mindy Jensen on Sunday night at 8:00 on a Sunday night saying, "Hey, we need a guest. You guys have been great at writing articles. Can you come on the show?" And we were like, "Yeah, we'll do it." And so that's how we just, caught a lucky break, but worked really, really hard for a year to get to that, for that door to open. And we were great. We didn't know that's why we were doing it. We just knew we were enjoying writing articles, and it was getting our brand out there and getting good conversations going with people that were reading the articles. But then that podcast really changed our lives.
Yeah.
Yeah. It was the first big door to open for me and Liz.
And so a couple things there that I want to cover. One is, and I love to cover mindset stuff on the show because I think that more so even than the numbers, I think the mindset matters more. Only because, whether you start or not with investing, that has nothing to do if it's a good deal or not. That has nothing to do if you run the numbers the right way. Only slightly. What really matters is having the mindset of almost and believing in something that's bigger than yourself, right? Chasing a goal and achieving that goal. So I want to chat with you real quick on mindset. I want to cover this quite a bit while we chat, but at that time, I'm a big proponent of work, but work for a reason, I'm not a proponent of just work, grind, and retire. It's more work for something bigger than yourself. Did you guys know when you were doing that? Hey, this is a lot of work and this is hard, but there's the sort of the rainbow at the end of the road to this is much bigger than we've ever fathomed. Thus, we're willing to put in the work. What was your mindset as you were kind of going through that phase? Because I think that's a critical lesson.
Oh, I can tell you that in the beginning, it was just just get through it, live another day, keep pushing, solve problems, be diligent. That's the mindset that we came up with. It was not like Liz and I woke up 17 years ago and said, hey, 17 years from now, we're going to have a couple thousand units in a bunch of different states and an A+ phenomenal team that work with and for us and everything like that. That was not the business plan. That wasn't the roadmap we drew for ourselves. We had to build up DeRosa and then realize it was going in the wrong direction. And so burn it down and change it up and go in a different direction. DeRosa's been a couple of different companies in its time. It has been a property management company that ran 115 units in Trenton, New Jersey, until we realized that property management was a grind and a job, and it was better to third party hire that out. And then we figured out that Trenton, New Jersey maybe was not going to be the market that was going to be the only market we wanted to invest in forever. So we had to pivot DeRosa a few times. I've done about 4 dozen fix and flips, Jeremy. So I think that the big mindset thing I would say is, for us to keep trying and not quit,
right?
Because I could have quit and just gone back to gotten a job a million times over, but because we didn't quit, we got to live another day, take another swing at the plate, strike out, and then swing again, and then strike out, and then swing again, and then get on first base. And then, okay, that worked. Let me try and get on first base again and move that guy on first over to second, And so it was about figuring out what worked and then doing it again and working through things that didn't work.
Yeah.
And finding a way to repivot those things and continue to focus as a company.
Absolutely. And so let me pivot really quickly because I want to make sure that the investors have a general idea as well. If you're an investor who hasn't really gotten into real estate, right? You're not exposed to it from an investment standpoint, and the DeRosa Group pops up on your radar, and there's an opportunity in front of you. They've had a chat with you, and they're interested. I wanted to chat with you about what does that look like from the moment they've become familiar with your company to chatting with you to then investing in a deal, right? So how does that sort of process look like for a typical investor?
They can just go to DeRosaGroup.com they can just go to DeRosaGroup.com/investor. I mean, that's all they have to do. Now, we do the work for those that don't have the time to do the work. And that's what we do. And just those that invest with us have to be patient because we're not a flash in the pan company. We're not going to just buy an apartment building and try and flip it and resell it in 6 months for double what we paid for it. We are typically a cash flow investment company. So that typically takes longer to achieve cash flow and longer term sustainability for a property versus buying a property and hitting it with a magic wand and then it's worth a lot more than we paid for it. That's not what we do. In addition, they got to be okay with the markets that we're invested in because we don't invest anywhere. We invest in super specific markets, not because I think that Lexington, Kentucky, is the best place in the entire world. It's because we already have assets there. I already got boots on the ground. I got people, I got resources, I got assets there already. So we believe in scale and market scale in that. So you also have to believe in transforming lives through real estate because I will not do a deal that is just economically smart and makes a lot of money. I'll do a deal that I know makes a lot of money, but also makes a difference, right? And you got to be okay with that I'm not going to do something that is not going to better the lives of someone through the work that I do. I will not compromise profit in exchange for that, but I submit to you that there are profitable deals that make a difference, and we find those and then do those.
100%.
Those could mean buying an apartment building that's got true story, 4 active drug dealers that I have to have the SWAT team come out and remove. True story. Or properties but that property that I just told the story of now has 2 playgrounds with kids playing on it. That's what I mean. And so you got to be okay getting involved with something like that. And it might take patience to get there. Forgive me, that's my Trenton landlord coming out because I know how to fix that kind of thing. I'm not afraid to go into crime areas because we know how to fix it. Thanks, Trent.
Apologies, not necessary, man. I'm telling you, some of the stuff we invest in here locally in Pittsburgh, some of the cash flow stuff. It's not in areas that I necessarily would send my kids to school, right? But it's in areas that they require housing, and we can make a difference. Like you mentioned, from a social impact perspective, right? So if I can buy a building that is considered blight or it's a blighted property in an area that I think otherwise is a great area, I'm going to do that. Partially because I obviously.
But if I can buy that house and but I can buy that house and give them nice countertops and central air and a dishwasher.
Exactly.
Where those are things that folks like you and me or some of your listeners might expect as for granted. I'm not going to move somewhere that doesn't have central air. But the tenants that I can rent to in workforce housing areas, it's not like an upgrade, but that's not an amenity that they take for granted. They're grateful to have that. And for the same rent that the guy's charging down the street that doesn't give them a dishwasher or a ceiling fan or whatever, I give them a little extra because it makes my property sticky. Not just because it's charity. It makes my property sticky. They're not going to leave me, because I give them a better quality of life for the same amount of money as the guy down the street does. And that makes my property get the longevity and they stay longer in DeRosa assets.
Yeah, and you're getting a better tenant mix.
True stat.
And you're getting a better tenant mix as well. I mean, that's what you need.
Yes.
Yeah, that's awesome. Mm-hmm. And so I wanted to sort of use that as a good pivot because the market now, right? People are looking at it, they're like, is now even a good time to put money out there in real estate? And I think there's no better person to kind of chat with from a macroeconomic perspective than you.
Sure, it'll be fine. Come on in, the water's fine. No, I mean, I think that the days of just throwing a dead cat at around at a deal and whatever deal you hit is going to be a fine deal is not true anymore. A lot of deals are way overpriced, and those overpriced deals aren't selling, right? We had a deal. Seller wanted $125,000 a unit down in the Southeast in one of our markets in North Carolina, and we couldn't get there. We're like, we're at 112 a door, and he went under contract with somebody at 125. Well, guess what? The broker called us and said, "Hey, that buyer went away. I know you wanted it for 112. Well, he'll do it for that." And we went and looked at it and said, "Guess what? We're not at 112 anymore because the market and the rates and all that. We're in 105." And the broker said, no problem. He can get much higher than that for the property. And he went to his seller, and the seller said, let's meet with him. So we're meeting with these people next week, because the market is slowly but surely coming back to a level of reasonability. And it has to, because interest rates are mandating that. And unless you want to buy a deal that makes like no money for the first 3 years because rates are so high, and it's really, really pinched economically, I'm not going to do that to my investors. I'm not taking that level of risk. Again, remember, I'm a cash flow investor. And if I can't make cash flow because rates are high, then I'm going to make an offer that makes sense. And slowly but surely, Jeremy, real estate changes over time, and it takes a while for it. The stock market changes overnight. Real estate changes over like longer periods of time in that. And so real estate is slowly coming back around. And so I think that for the patient buyer, it's a great market to be in, but you got to be patient. And there's also other asset classes besides housing, which we're looking into. We're looking at new construction single family homes, like for rent, because it might be hard for a while to buy a home in America. Especially if rates stay at 6-7% for a while. People may need to lease a 3-bedroom, 2-bath, or a 4-bedroom, 3-bath, right? Well, we're working with builders on buying product that they had intended on selling. We're gonna buy those and lease them out and release them out as a community.
Absolutely.
And that, because I think that'll be a good play, because people may want to just rent out and be more nomadic for a while in the new economy. So yes, Jeremy, but you got to be patient. You got to be creative.
Yeah,
those two
real
things.
estate's funny. It's like I always say, and this is an overused quote, but it's chess, not checkers. Like it's not about making quick moves just for the sake of making moves, right? It's about you're thinking through 3 steps ahead. And so, I mean, same boat, right?
It was. If you're playing checkers the last 3 years, man, you could have made a boatload of money. But now the checker pieces are now off the board. Only the kings are left, and now it's time to go play chess.
Exactly, man.
Yeah.
And it's funny, both as an attorney, I'm a commercial real estate attorney, so as an attorney and also as an investor, like I'm seeing the market from both sides of it, and it is retrade season. Like everybody who is under contract is retrading deal.
My mortgage broker told me that too. He said, "Man, I've made so many offers on financing on properties, and these folks are coming back and saying, hey, listen, the price is now down 10%, or hey, that deal fell out. Disregard. Don't worry about it. Me and the buyer are just going separate ways, whatever." So. I think that things, and there's even people in workout right now. I don't think this is going to be like a crazy crash, Jeremy. I think that the residential sales market on single family homes is probably going to slow down a lot, and maybe get more realistic. But on the multifamily side, I think for those that need to sell or want to sell just to get out, I think that we'll start seeing way more realistic prices soon.
Yeah. Once I noticed that, like, I'm thinking of like Charlotte, North Carolina, for example. The cap rates things were trading at a certain point when it was basically free money for a while were absurd.
3.
And even when interest rates started coming up a bit, like it was still absurd. I'm like, wait, like what's going on here? Like sooner or later, like you said, prices have to come down. I mean, the level of interest rates at this point is going to put downward pressure on pricing. So pricing has to come down to make this make sense. But like at first, when you're seeing those deals that close, and I'm like, wait, that doesn't make any sense. It's just funny seeing that stuff. And so I completely agree with you from a macroeconomic perspective. So do you feel like you're going to, I mean, it's kind of have to, right? Spoke to the idea of patience, like, slow down for a bit, see where the market starts to trend, and then, where opportunities lie, take advantage.
Biggest guidance I got from people, Jeremy, is to find deals that make cash flow day one. The days of a deal being in the red or not making much money or any money at all for the first year or two may have worked. That may have worked in a rising market. We're not in a rising market anymore. We are at the least in a stagnant market, price-wise, and maybe in a bit of a declining market. And so I invested in a declining market. Remember, I've been doing this for 17 years, right? So in 2007 and 8, I had properties that were worth like 150K, and I'm sorry, that I paid 150K for, and were worth 80K. But guess what? They were cash flowing, and so I could hold them, right? And I didn't have to sell. Great, you don't have to sell. You got long-term fixed debt. Great, sit tight. And so I did. And they cash flowed, they made money. And then when the market decided to behave itself again and things came back up for a while, I was able to sell them then, right? But if you got a deal that is bleeding day one and you're hoping to bandage the bleeding and make it worth a lot more over the time or whatever, you are holding a little hand grenade, and maybe you can get it worth more and get rid of it before it explodes. But you are constricted by time because the property you bought might not be worth as much in a declining market, and you might not be able to sell it. And that's what's happening to some people. And that, but if you cash flow now and you're paying your debt service now, then you can be a lot more patient as an owner versus properties that have a defined exit period, like debt that expires soon and that kind of stuff.
Man, dude, I could talk to you all day, man. Like I love, not only I love,
you just have to have me on again.
right?
How about that?
Right? Part 2.
You just have to have me on again.
Man,
yeah.
If we will absolutely have you, man. When you have the time, you just say the word. I will have you back on the pod. And at some point, your wife is an absolute champion as well. And at some point,
she'll talk to you. She's already photobombed this show one time. She walked into the door behind me, and I gave her the stink eye, and she walked out. So, but yeah, I'll let her know that I'll let her have her own show without me on it, and I'll be sure to photobomb her show when she's on.
Please do, man. Please do. We would love to have her. Love to have you, man. Before we go, I do want to just quickly chat because I like to have like a really high level, almost to a spiritual level, sort of like mindset conversation. So we'll keep it brief. But I want to chat with you because like you're somebody who you've reached goals that are unimaginable for the average person. I would say even for the high achieving person, your goals that you've reached are completely unimaginable. And so I want to kind of get an idea, like when you wake up in the morning, what's sort of the belief system that you have as far as you've already said the quote of your company, right? You know, the motto, but like your individual belief system, what do you kind of approach each day, sort of the attitude that you have that can be adaptable for somebody else who's kind of looking to, level up?
I'm very deeply connected to my creator, call it God or what have you. I'm very deeply entrenched in the theory, in the philosophy, the truth that my thoughts and words create my life. And so awesome. I do my best to think and speak as positively and as optimistically as I can. Because I find that things it's like there's a magic wand. I find that things tend to work out in my favor if I think positively and speak positively about them for long enough,
True.
Not just wishful thinking, but just focusing on the end game, focusing on what I want and not what I don't want or what other people are doing wrong or whatever. The more I do that, the better I feel. And that tends to create the opportunities, those weird twists of fate, those weird coincidences that tend to show up. Some people will call them just coincidences. But one of my mantras in the world, Jeremy, is there are no coincidences. And everything's meant to happen. And we have a hand in that. We're not just here actors in somebody else's play. We are the director, producer, and star of our own play. And by thinking positively and by focusing on right outcomes and what we want to see, and by getting knocked down, Muhammad Ali, it's not about whether you get knocked down, it's about whether or not you get up, right? So getting up and still remaining positive and shaking it off and fighting for what I believe in, that's what I stand for. And I attribute that to my success. And I don't live a charmed life where I just, walk around on clouds. I still put my pants on one leg at a time like everybody else. But at the end of the day, I do think that it's given me the willpower and the desire to get up and to try again, and again, because I know that that's worked for me. Again, I've been doing it for 17 years. I know that positive thinking and trying again and positive mindset, and by not accepting things that that are not at the result that I want, by pushing and trying again, I know that works because it worked for me up till now. I mean,
absolutely, man.
So that's my mindset, Jeremy.
I love it, man. Thank you for that.
Thanks for asking.
I'm a big subscriber to Tony Robbins, sort of his approach to life, and I think,
oh, dude, read a book. There's a book out there I want to plug by Neil Donald Walsh called Conversations with God. Phenomenal book. And a lot of what I just said is in there. And that's probably my spiritual guide is that book.
Fantastic.
I'm probably due to read it.
Dude, we're going to plug that into the show notes. I'm ordering that immediately after we hop off.
Okay, get it on audio. Because on audio, the old man and up, Edward Asner, he's the voice of God. And it goes back to between him and a woman. It's an awesome
I love
book.
that.
So anyway,
I love the audiobooks where they figured out like, hey, let's make this a performance. Malcolm Gladwell, I read a lot of his books. He just did that with his last one. And like, first off, his voice is good for it anyways. But then like when you add in like the performance element, changes the entire dynamic of a
Make
book.
it a
So
shtick, you know?
absolutely.
I regret that I read Matthew McConaughey's Green Lights. I read it. I didn't listen to it. A friend of mine listened to it, and they said that it's great because McConaughey reads it himself, and he does the voices and goes into character during the book and everything like that. So that's a good book. I've heard it's a good book to listen to, which I have not done that. I've read it myself, and it's a great book too.
You're out here dropping knowledge, man. I can't thank you enough.
That's what I do. I'll have me on again. Let's have this conversation again soon.
Absolutely. We're going to do part 2, 1,000%. I appreciate you jumping on, man. And to the audience, I want to quickly say thank you so much for joining us. I really, really do appreciate it. As always, if you have any questions, feel free to reach out to me on Instagram at Big Law Capitalist or on LinkedIn at Jeremy Toms. Matt, I've taken up far more than enough of your time, dude. 1,000 thank yous. Thank you so much. To the viewers, thank you. And I'll see you guys later. All right. Peace. All right, we did it. Thank you so much for joining me for this week's episode. I really, really do appreciate it. Do me a big favor. If you want to be a part of the Big Law Capitalist community to stay up to date with all of our latest episodes, you gotta hit that subscribe button. Super important. But I can't thank you enough for joining me this week. I'll see you next time. Peace.